Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Wednesday afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq 100 weekly performance in, Brian, what has been a week, I would even argue trading sessions with the round tripping that feels like each session could be a week in itself.
Absolutely. And when the dust settled over the past week, QQQ and QQQM were down 5.64%. That's relative to the S&P 500 down 4.14 and S&P 500 value down 2.89%. Over the last week, it was really just value-oriented sectors were viewed as less bad. Sentiment remains clearly negative across the board, and not many places to hide in the equity markets. And to your point, despite that sharp reversal, just literally as we talked last week following the FOMC rate decision and the subsequent press conference, equity markets just continued to slide on sort of the same story of risk, which is inflation continues to be significantly above the Fed's target. War in Ukraine is continuing to put upward pressure on inflation, and COVID lockdowns in China contribute to worries about supply chain and economic growth. And all the meanwhile, it's, can the Fed somehow engineer a soft landing amidst all this noise?
Yeah, and what it can raise rates, but there are the things that are beyond their control, to your point, geopolitics, to inflation, look what's happening in the mortgage market, and we could see this in your second chart here. Just look at how rates are moving.
Yeah, and I think it's very similar to last week in the decision, but with the last week was the equity markets. This is looking at the 2-year Treasury and the 10-year Treasury, and you see that huge knee-jerk reaction right at the time of the report, and then a slow moderation, and with that, it's a little bit head scratching. You look at a lot of the attention over the past week was on this morning's CPI reading for the month of April, and while we did see a slowdown from March, we've talked about March kind of being circled on the calendar as peak inflation from a number of different economists. Readings were still higher than estimates. Year over year CPI for April grew at an 8.3% clip, down from 8.5 in March, but still higher than estimates at 8.1. The core was up 6.2% year over year, down from 6.5 last month, but beating estimates for 6. On a monthly basis, I would say probably the biggest attention grabber was the over 18% increase in airline prices. We've seen pressure on lodging away from home, up 2% month over month. And overall, core services rose 0.7%. Core goods inflation rose by 0.2% versus a 40 basis point contraction in March, largely from new vehicle prices up over 1% month over month. That kind of offset the slide in used car prices that we've seen at 40 basis points, and then some other categories like education and communication, as well as apparel. Another thing that was interesting in April, we saw energy prices come down by 2.7% versus an 11% gain in March. Although, as we look forward to May, most are anticipating that energy will contribute positively to CPI, as gasoline prices are set to increase heading into summer driving season. So a lot of push and pull dynamics here, a lot to digest in the CPI report.
Right, and if we take a look at the sectors here, financials leading the way, and of course we can understand why it detracted from Nasdaq 100 company performance, because we don't have financial companies in there.
Well, so on a relative basis, it contributed to Nasdaq 100, but I think when you look kind of broadly, fully Nasdaq 100 against S&P 500, or in this case QQQ versus SPY, every sector in S&P 500 was in the red over the last week. Within QQQ, 6 to 7 sectors were negative, the lone exception being utilities. But from that relative contribution standpoint, it's the growth overweights that are weighing on Q's performance against SPY. Tech, consumer discretionary, and communication services, along with the more growth-oriented healthcare exposure within QQQ, all weighing on relative performance against SPY. So here we are. Tomorrow we get another reading on prices with producer price index for April. Tuesday next week we get a look at consumer spending with advanced retail sales for April, and whether or not we're seeing whether or not we will see the continued effects from inflation spilling over into the consumer.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.